Awesome, guys. Welcome back. 2026. We are officially doing live streams again. How's everyone feel? good, good
Hoorah,
rest, good
man.
break.
Yeah.
Raw.
Ready.
I, I think everyone's missed you, Marcus.
Yeah. I'm here. Still in the game.
Good, good.
Still in the
Sebastian,
game.
how you doing?
Yeah, good guys, good.
Good. I'm just waiting. I'm just trying to get this live stream up so I can post it. Is anyone seeing it on their YouTube yet? Here we go. Live with the Minotaur trading system. Copy. 1 second, and let's do it. All right, cool. All right, so it was kind of okay to have taken a bit of time off. I feel like not much has really happened in terms of price. We've kind of been stuck in this range for some time. I still think we're stuck in the range, despite today we're still above 81k and still below 100. I don't know what you want to call the range right now, but if we haven't gone below that 81 and we haven't gone above that 100, nothing untoward has happened just yet. So let's dive into some of the strategies that we've been running. Let's look at the heat maps as well. Marcus can dive into that. And Sebastian, you can probably discuss some of the things that you've been doing in the background as well. But yeah, let's start off, I think, with Marcus. Let's take a look, man. What's been happening?
All right. Let me share my screen.
Yeah, share your screen.
All right. Let me know when you see it. There it is. All right. A whole lot of nothing has been happening, which is a good thing. We are still just take a step back and recover how we got here and what we're actually doing. We're still in this large consolidation here. There's a macro profile here, and we're still in there. We haven't left it. We've been in there for a year, and we're still here. It has a clearly defined range, a value area high. It has a point of control. It has a value area low, fair value. So if anybody's thinking about buying Bitcoin, fair value, the market agrees that fair value is at 96K. So currently we're trading at what? We're trading at about
83.
83K. So the value area low, this wholesale prices for Bitcoin would be below in this area that we're in now. 83, 81, 80K. Anything in there around this value area low is wholesale prices. So this is a good opportunity to pick up spot Bitcoin. Just to put that out there. One other observation is, let's go back into what we're actually doing. We are in we're in a accumulation phase here. It's accumulation. Then you discover, you distribute here, and then you discover and you accumulate. So we're currently accumulating. The pattern that we're looking at is the one that we had in February of last year was a model one where we were sweeping the lows. That's a model one accumulation. So it's a very common institutional pattern. We're here. This is a model two where it doesn't necessarily make new lows. The lows can be higher, which leaves a lot of liquidity behind. We're right here. So that is a very common practice to come and sweep those lows and then start to move higher. So we're in that process of sweeping the liquidity that's trapped here. A lot of longs that was pretty close to this recent run up here, and that's going to put us into a nice move here. We'll tap this value area low. We might deviate down a little bit, and then we should be ready to start moving higher, at least in the short term. We have all the return liquidity that we starting to fill in here to take us there. Let's see here. One other observation. Let's back out some of this. When you just look at the 5X I always say on every call or every meeting that all liquidity is being taken all the time, and the market is fractal. It just takes longer for it to get to the larger time frames. Like your 25x is about 8%, 4%, and you have your 10x is further out, your 5x is further out, and your 3x. It just takes a long time. But in a bull trend, typically these 5x pools are very good measuring sticks, right? So when you take out a lot of 5x, the market is going to consolidate. That's just how the patterns work, how the markets work. When you take out a big pool of liquidity, you're going to get a consolidation. When you take out a big pool, you get a consolidation. And these consolidations, the bigger the pool is taken, the longer it consolidates. So this happens at all time frames. So what's interesting here is what are we going to do now? Well, this price action with this price action that is accumulating here, the market's moving as we speak. It always moves when we get on these calls.
Yeah. Where's it moving, up or down? It's moving down.
It's going down. So we can zoom in. Let's take a look at that right now. We got real time breaking news here. So I'm gonna zoom in on the 4-hour. And what I'm looking at here on the 4-hour is I'm actually want to see this area here. Right here, we have a smaller volume profile, a smaller profile here. This analyzing this accumulation zone. And so right here, there's liquidity here. We want to take a look at that. So that's what we're going to look at. Let's zoom in here. So now when we zoom into the 4-hour, we can see the same profile. We have our value area lows, value area low, value point of control, value area high, value area low, and that's this is that external liquidity that we're taking right now. We did the same thing on the other side of the range. We took out the external over there, and now we're rhyming in the other direction, taking out the external to the other side.
So that's interesting. There, that took out that 98, and then it came back down. So, is it potentially that this is that bottom? We're bouncing again off at 81, 82, because a breach beyond that into the 70s would be scary for a lot of people. I'm sure a lot of people watching.
Yep, and we can't go higher until we're not going to leave all this liquidity behind in the short term. That was necessary because this liquidity has been building since we've been here. You know, we remember we were doing a Model 2 distribution where we weren't tapping into this. This liquidity was being left behind. So market makers are going to come back for it, and then we clear all this out. Then we can move higher. The only question is, are we going to stop at the 25 level? We need to take an honest look at the larger liquidity. There's the 10. You know, if we tap that 10 out, we would be looking at about 78 or so to get there. Yeah, and it's an equal amount above and below. And then if we go, let's see where the 5 is kind of out of range. There's a good chance we won't tap that 5.
And now that's because there's a gap, right? There's no liquidity to connect that. There's no liquidity bridge it yet.
Right.
So that's the reason behind that. Yeah.
That's one reason. Yeah, and also there's just the market's not coming for it yet. It will later. It's not coming for that yet. You can see we're only looking at 5 on the big time frame. So there's a pool here equal distance, and there's a pool here equal distance. So the market will have to determine which one it's going to go after. The one it goes after is going to consolidate again. If it goes up here, then you can expect consolidation here. If it comes down here, you can expect consolidation down here. The only challenge is it already liquidated all those positions. So when you liquidate, you pick up inventory, right? So what are you going to do with it? You're going to liquidate it in another size pool of the same size. You know, the next logical move is the market, you know, moves in balance, right? So you've taken out this inventory, you sell that inventory off here, those positions here, then you might come back down here for this low later. That'll be the more logical path instead of a double liquidate this gigantic pool and you come back here. If it did do that, it comes back to what you were saying, Kosta. The bridge isn't built in there just yet. It will probably take a little while if it's going to do that. But the logical move would be, you know, liquidate this like it's done, then sell those positions off here because you just accumulated, right? That's what the makers are doing. They're accumulating. then you want to sell that inventory off at retail prices because this is a value area high of the range. This is retail. You're accumulating below fair value right here. So the logical place to offload your books would be here. These guys are already trapped. They're ready to go. Then it doesn't necessarily mean we're going to go to a new high. Then you could come back down here and tap this lower position later, which would put a structure in like this. This is a low here, right? Then you make a lower high, and then you can make a lower low, and then go from there. But one last thing I want to mention here is let's put everything in here. The short-term price fluctuations are especially in derivatives markets, which drive discovery. Short-term price exploration or price fluctuation is determined by liquidity. Liquidity is created and is harvested. However, macro, we're stuck in this range right here. This is a big, massive range, and we've been in it for a long time. What determines when we finally get out of here and do that Michael Saylor stuff, 150 or beyond, is you won't break out of this range. The big ranges are broken with macroeconomic conditions. It requires macro conditions to get out of these big ranges. Small stuff, this stuff here is determined by liquidity buildups. But in order to break out and discover somewhere higher, like we almost did here and we came back in, we almost did here and we came back in, the thing that's going to determine the big picture of where we get into another huge bull run that puts us in a brand new consolidation somewhere else is we're going to have macro tailwinds. And we do have that coming with the liquidity and the Fed and the U.S. administrations and POBC of China. Everything's the tailwind is in place to go higher, which leads me to believe that we won't be attacking these old lows anytime soon down here, because we have the macro tailwind behind us that can get us out of this range eventually. So that's all I got right now.
So we're saying basically we could see a kind of rally to 112 and back down again, or rally beyond that to 140, 160 and back down again. Do you think like those shorts up the top there between 120 and 160? What are the chances of those getting taken out also before we come back down? Do you think that those two scenarios? Do you want to just maybe draw those squiggles? 112 back to 70 and also 150 back to 70? And we can maybe just have a look at two potential scenarios.
Yeah. Well, so first let's just take the liquidity off where we can see the moves, right? So you can see right here we discover, distribute, right? Then we discover back lower and we accumulate. So, the logical move is to distribute, right? So you distribute that. Now you can keep going or you can come back lower. That's kind of the path.
Yeah.
And what's going to do? Because here's the big foundation that's keeping us here. It's this. It's right here. This is what's keeping us here, and we don't have enough rocket fuel to get out of here. All this little stuff here, this little stuff in here, this is just liquidity moves, fluctuations. But the one that's going to get us out of here this way or that way, we need something macro. So what's the macro trends coming up in the next year?
Bullish, yeah.
Yeah, bullish. That kind of starts to invalidate or make this less probable coming down here.
Yeah,
it's less probable because the macro is what's going to make or break this thing. If the Fed, we were coming into a tightening environment, restrictions, low monetary, bad monetary policy, then bear.
Yeah, but the opposite is happening. That's interesting. And we're seeing what's going on with silver and gold. And there is, I actually read something today that in 6 hours, the whole market cap of crypto was liquidated on gold in 6 hours. The whole market cap of all of crypto, which is just insane how much money is sloshing around in some of these commodities. And a lot of that money is going to rotate into Bitcoin, right? That's what's going to happen.
It is because gold got overextended. Gold is the first one people know about. They're comfortable with it. Everybody knows what it is, and they're going to run there first. but they're going to have to find something else because those are overextending now. That capital's got to reallocate somewhere.
Yeah, absolutely. All right, let's take a look at two of the algos that have been running on Minotaur. I'm just going to give you an idea of what's been happening. Maybe you guys can chime in. So, the algorithm that we've created there, it's like a Swiss Army knife, and there are lots of different settings that you can input that give different outcomes. And some settings work well in bull markets, some work better in bear markets, some work better in ranging markets. Now, having said that, they always work. They just sometimes they work better. And what do I mean by better? Well, sometimes we simply mean by better is just time in a trade. Now, time in a trade is not the end of the world with this system. Drawdown is not end of the world in this system. To be frank, it doesn't matter what setup you create. At some point, you will have to spend time in a trade, and at some point, you will spend time in drawdown. That's just the reality of this strategy, right? And that's something you've got to get used to. So I want to dive into more of this was a lower TP strategy, so a much tighter TP strategy, around 1.5%. This particular one's been managing to get out and to continue trading, which is fantastic. This is more of a high frequency style. Again, lower TP means we're trying to exit much faster. So this one's ticking along really nicely, as you can see. Hold on, I'm bringing on that. We go back to, this was the last time it's been a while in a trade. We can see from the 11th of November till around the 3rd of December, which, look, for a lot of people, even that's hard to stomach. That's almost a month. But you can see just how structurally it worked, how it was able to pull that average price down rapidly and take profit there. And it's continued to print really, really nicely. This is one of the reasons why we also, and see we just entered the trade here. This is one of the reasons why we also advise to have a couple of different setups going, because it just gives you more activity. Now, just because this is trading right now, it doesn't necessarily it's going to be more profitable than something that's stuck. And we can have a look at something that technically is stuck, which is, it would look more like this. So this take profit is a little bit, it was supposed to be around 5% take profit. I'm just going to fix that. But this particular one, which some people have been using, this is the 5% take profit. You can actually see this one is more of a swing trade. And as a swing trade, it's working perfectly. It's just been in the market for a while. So it entered pretty much at the tip top at around the beginning of October. And, it survived that huge liquidation event. It nearly got its TP there. And again, it's been averaging down really nicely. But it still hasn't hit its TP. If we come all the way to here, you can see. But having said that, it's still got a lot of bullets left to shoot off. And when this does take profit, it's going to take a significant amount of profit, because you can see how many safety orders have been executed, and also that 5% take profit there. So again, maybe Sebastian can actually just jump in and discuss the difference between these strategies. But again, this is not something to really worry about. Time in a trade is always going to happen at some point, right? And drawdowns are going to happen at some point as well. When you understand the strategy and the system we're using, it's nothing to be afraid of. But just generally in trading, these things are not to be feared. They're just part of the game. And did you guys want to add to that at all?
Yeah, well, it just comes around the risk management as well. And drawdown's only scary when you're, over leveraged and using position sizes that are too large, because when you're in drawdown, if that's the case, like, your account can evaporate quickly. So the point is as well understanding like where you're placing your risk levels, because that makes drawdown or being underwater much easier to stomach. And it's important to remember that, all institutions and traders have time in drawdown. You can make the argument and go back and look at some of the most successful funds ever held positions for years at a time, right? So the point is not that, we always want to be doing that, but it's that, drawdown is only really scary when you haven't managed your risk correctly. When you manage your risk correctly, it's just a part of a trade. That's the way I see it.
Exactly.
Yeah. What are you seeing in the trading desk, Marcus, as well, with your high, more advanced users?
Yes, it comes down to the same fundamentals. You want to make sure that you manage your position size is very, very critical. It's probably one of the most important things is to keep your position size in check, because what a lot of algo operators don't realize is that these numbers are dynamic and your risk is changing all the time. When the bots are taking profit and re-entering a new aggregate position, your levels are also adjusting. So, and then when you are in drawdown, you are locked in that position. You cannot get out. It's called what we call a tractor beam, right? You're locked in. There's not much you can do. So it's getting those position sizes correct is the most important thing. Also on the desk, we're looking at priority one is to keep the bots operating, and we do that by not being too aggressive, making sure that we give them the opportunity, the bots the opportunity to trade the consolidation, and when the market pulls back, make sure that we're not getting overextended, so we can keep operating. But yeah, and we're excited to be working on the hedging. We're doing hedging, and we're using bots in tandem, so we do some advanced stuff to where even when the market goes against one, you have a spare that you can start at a lower level, so you're always operating. And then we're working on different types of hedging. I think that the future outlook for the desk is going to be, our ultimate end game is we're looking to be more delta neutral. So what that means is we don't want to be so directional, because you got to understand one thing. We trade futures. Futures are contracts. Contracts are inventory. That's what we do business in. So it should not matter where the market's going up or down. Our bots make money from volatility. They don't make money from picking direction. So that's one of our big focuses in 2026 is to be more delta neutral and basis type trading, to where we're not exposed to direction. And the way we're going to overcome that is with the hedging and the proper sizing and how we position the whole strategy, so that so it doesn't matter if it goes up or down. The appreciation part of Bitcoin, that comes from your portfolio side. The Bitcoin that you're holding, that captures all the appreciation. But from a algorithmic standpoint, our algorithms make money off of volatility, up, down, sideways. Doesn't matter.
I think if there's one issue, one thing that I guess the mindset shift is that too many of our clients and even of ourselves are trying to make too much money from the trading algorithm, whereas most of us already have the Bitcoin exposure, right? And that asset is appreciating. What you really want to be doing is you want to be really just accumulating more Bitcoin at this stage, using that algorithm to capture that volatility and add to that. If Bitcoin's going to appreciate, 10, 20x, every dollar you earn might go up 10, 20 times. So the name of the game is just to constantly be earning and then converting that into Bitcoin, if that's the strategy. Right. The other strategy is if you're trying to generate cash flow, because this is something I've been talking about a lot in my YouTube videos. Again, if you want to, instead of saying to yourself, I want to make $5,000-$10,000 a month, you need to understand firstly how much capital is required to do that safely. Because if you don't have enough capital and you're trying to generate 7, 8, 9, 10% a month to generate the income that you need, you're gonna get stuck in that tractor beam that Marcus is talking about. So having realistic expectations of what your wallet size can actually generate, I think is really important, because again, you need to be staying in the game. You need to be trading all the time. And the position sizing is just a big part of that. So I think even for ourselves, 2026, that's going to be the focus. Really trying to understand what the goal is and then setting it up to help us achieve that while staying in the game constantly.
Right.
What do you think, Seb?
Yeah, you said it perfectly. And that, I think sometimes that's the key to separate what we're doing as well, because, if you come into the live market trading expecting always a monthly return, I feel like that can set you up for failure as well, because it's not really like predictable like that, right? It's all based on the volatility that the market gives us. And when it's massively volatile, we have the ability to get more consistent yields. But when we go through periods of elongated selling pressure or sideways action, you have to realize that kind of price is not going to necessarily produce you yield. But it's also realizing that the slack and the carry can be picked up when the volatility picks up as well. This is the thing. It's lumpy. And just because you may not get a net return for, let's even say 6 months, doesn't mean that over a period of 2 months, you can't make up for it. Because one thing we know is if we go into big drawdown with big positions, when that takes profit, you're going to be making up for a lot of the time that you perceived as being dead in the market.
Yeah. Absolutely.
Yeah.
Anyone have any questions that's watching this? Is a good time to post so we can cover those as we go. We're going to be doing these shows weekly again at this time, either on our channel or Giovanni's channel, depending. So just keep an eye on which one's there. But overall, I think that this time is different, but history does tend to rhyme; it never repeats. I'm still optimistic for this year, looking at the macro tailwinds, but I think we always need to be unconsciously, consciously ready for the worst. And in a way, we always have been. If you've respected the power law support, and most people watching this show, have heard of us through the work that Giovanni does when he started talking about us, is that we always protect ourselves below the power law support. And if you're running our system and you're protected below the power law support, you're not even near a level of stress. Absolutely nowhere near it. So the system is sound. It's doing well. Time in a trade is not failure. It's just time in a trade. Drawdowns aren't losses. They're just drawdowns. So from our perspective, it's been an interesting year. We've been stress tested extremely violently and extremely well. And we're still here. Again, the bots are still running. The system survived. And the philosophy that we're using is proving to work over and over again. And I don't know, that I feel really good about where we are going into this year. Do you guys want to add anything to that?
Well, just, look back as well. I mean, so many people, are you really that disappointed? We ran up to $126,000. It's not like Bitcoin didn't have a run here, right? It went on a fucking huge run, excuse my language, but it went on a massive run. So
yeah,
we can't expect price to just continue up in a straight line forever. It needs what is happening now.
Yeah.
And then the liquidity shows that. It needs what is happening now to be able to get the legs to move up. I mean, what the point I was making on my live stream today with our community is that, don't forget, people aren't excited about Bitcoin when it's doing this. And this is when you should be buying. They're excited about it when it's at the top, when it's euphoria. And that typically is when you should not be buying. So, it's very easy to go and look at the news now and feel really crap about Bitcoin. But if you really zoom out and really pay attention, now's the time to be excited, not to be scared. The time to be scared is when we're hitting all-time high, the way I see it.
We need this volatility to make money. Sorry, Marcus, go.
No, I can never understand the people that they don't correlate the same phenomenon, right? When you go to your discount superstore to go shopping, everybody wants a discount, right? Everybody wants a deal. People go shopping on Black Friday or after Christmas sales. They're looking for, everybody wants a deal, and nobody wants to overpay. But then when it comes to trading in the markets, everybody wants to overpay and nobody wants a deal. Right. Bitcoin is on sale right now. It's on sale. Now is the time to scoop it up, not run from it, and definitely not buy it when it's overpriced.
That's right. And it's always good to show an alert going off on a live call. So let's just show that little buy right there.
Yeah.
You can see here we're into the 1, 2, 3. That's the 4th safety order there entered.
Very good entry.
Really nice entry. What was that?
Don't know what happened.
And that's running, a 6-figure account. So you can even see the size of that position there, 0.8 Bitcoin. So that's almost like a $65,000 trade right there. So we're not messing around with small numbers either. We're running this system with big money. This system can handle big money. But when you're moving I did this analogy the other day. When you're handling big money, it's like trying to steer a cargo ship, right? Everything's set up from the beginning. You can't make fast turns. You don't want to make quick adjustments. When you're running big accounts, you want the path in front of you to be clear and predictable, and then you just want perfect execution, and that's what you get with our system, and that's why it works so well at scale. This is another point we always talk about. Remember, we had this. Marcus and I were at Token earlier this year, and we had this guy come up to us. We told him that we target the 3 to 5% a month, and he almost started laughing. And he told us that he does 30% a week. Is that right? Was it a week? And
something crazy, yeah.
Yeah, I messaged him about 2 or 3 weeks later, and he was in a 99.97% drawdown. And you know, that's just the reality, is that you can afford to take risks if you're only spending a couple of grand and you want to try and make 30% a week, because if you lose it, it's not going to matter. But when you start trading with 6 or 7 figures like we do, you don't have that luxury. You got to be smart. You can't grab the steering wheel at any moment and try and correct mistakes that are happening in real time. It doesn't work like that. Right, that's what happened with the Titanic. That's why it got hit. Right, by the time they saw the iceberg, it was already too late. So that's right. That's what trading with big accounts. Now, even if you don't have a 6 and 7 figure account, you've just got a 5-figure account. It doesn't change anything, because at the end of the day, you want to be doing things safely. You want to be doing things like you would at scale. You don't want to be reckless just because you've got less money. So the principles and the philosophy that we teach, the strategies that we teach and we show when we run ourselves, they apply really to all wallet sizes.
And besides, you want to be using good trading discipline, right? So even if you're trading relatively small, at some point your goal is to grow that into a larger account. Well, you want to have good habits and good trading fundamentals underneath you, so that you won't lose your money when it gets bigger, or you'll never get. If you have bad fundamentals, your small account's never going to get big, so you're never going to know. Yeah,
absolutely. Seb, did you want to add to that at all?
Yeah, I mean, I can quickly share my screen if you guys want and show you some of, I think, what I've been looking at on the general macro. Let me know when you guys can see.
1 second. There you go.
All right, how's that look visually? I've got a really big screen, so sometimes it looks a little bit compressed. Does it look okay?
Yeah, I see it.
Okay, cool. So I want to show you guys something, and kind of this repeatable pattern that happens on BTC. So if we have a look at what's going on here, I want to just go back in time, and I want to look at the double top that happened in 2021. So obviously here's the double top that occurred. First top was here, came down. Second top, basically at the same range, and came down again. Now, what's interesting is if we go back in time, and I mean way back, the farthest data that TradingView will show us was the last time price was, let's just say, around 20K. Now, when price was around 20K, this was the all-time high in 2017. Not many people will have remembered this because they weren't around back then, but I remember it clearly. And I remember a point in time where Bitcoin hitting $20,000 was a pipe dream that no one could have ever possibly imagined. And it hit $20,000, right? And we were all in disbelief. And then what happened after that was a massive sell-off, and we came down pretty hard, all the way down to 4K. Now, I want to show you guys something. Once we hit that all-time high, do you know how long it took Bitcoin to break out of that range? Well, I can tell you guys. It took actually 1,057 days for Bitcoin to retest the all-time high and then break it. The point I'm trying to make here is when it broke it, something very interesting happened. And I'll come back and show you guys this again as we move forward. But Bitcoin, if you study it and you understand its historical nature, has a funny way of its all-time high becoming the support line. So what happens, and we can see here, we had another attempt at Bitcoin breaking out, and eventually we were able to break out of all-time high. Now, what happened when we broke out of all-time high? We went from, let's just say, around 15 to 20K. This is the rough level, which is indicative. We pumped up 300% all the way up to 65K. price dumped back down, and then we had another big pump up, right? All the way up to 70K, which from the guys who were talking about $20,000 Bitcoin being a pipe dream, this was even more ridiculous. We were going $70,000. Like, is this even reality? Is this real life? And what happened when that top got blown off was that we retraced all the way back down to basically where we ATH'd the last time. So this is really interesting, right? We kind of actually bottomed out at around 15K. So pretty close to the all-time high of $20,000. Now, when we bottomed out there, we actually continued to have a consolidation period, but Bitcoin actually started running up. And it started running up all the way up to, guess where? Funnily enough, the previous all-time high on Bitcoin, which was around 70K. And we spent a long time trying to get above it. We could not get above it. We kept coming up and down, up and down, up and down, up and down. What happened though when we broke it? This is really interesting. Well, very similarly to how we broke the previous all-time high back here at 15, 20K, look what happens. We exploded up, right, from 70K all the way up to 110. Now, let me tell you guys something. At this point, this is when everyone went long, right? People were excited about Bitcoin because it's at all-time high and it's pumping. And it, funnily enough, did this repeated pattern that happened in the past. What do you guys think happened? Well, the previous all-time high that was insurmountable, something that we would never achieve, actually is now acting as the support, exactly as it did back in the past. So what happened? And where did we actually bottom? Well, take a look at this. We sold off from 110 all the way down to where? Roughly the previous all-time high. So the structure shifted. And when we hit this here, you can see an arrow I've drawn is that the longs were liquidated, right? Now, I want to ask anyone watching this, how many people do you think were excited about Bitcoin when all the longs were liquidated April last year at 75K? I argue anyone to go out there and actually backtest the news data, go have a look at what the news articles were saying when we were here, because they're saying very similar things to what the news articles are saying now. Bitcoin's dead, we're in a bear market, it's over, you know, all these sorts of different things. But really, in reality, this structure is still held. And this is why that 81 to 75K level is so important, because it's not like we've dove down and broken this structure. No, we're still sitting pretty comfortably ahead of where we were. And guess what? When everyone was bearish here, all the news, all the media, what do you think happened? The price exploded and hit all-time high 3 times in a row, right? Now, all the people that were down on Bitcoin when we were down here are excited about Bitcoin up here. Isn't this interesting? What happens when everyone gets excited and everyone piles on and everyone starts going long is, right, not only after the short liquidation event occurred, we have a long liquidation event. And everyone gets taken out, everyone gets liquidated, and price, funnily enough, is now playing on this same kind of level, right? So like the way I'm looking at it is, if you sit here, and the point I want to drive home is, if you sit here watching the price action every day, it's going to make you feel bearish on Bitcoin. If you sit here listening to the news all day, it's going to make you feel bearish on Bitcoin, because no one's excited about Bitcoin when they should be. This is when you should be excited, right now, not up here, right? So don't be lulled into this kind of repeated psychology that happens over and over and over and over again. And the psychology is, don't be excited about Bitcoin when it's up. Be excited about when it's trading at value. Marcus showed you earlier where the actual perceived value is in the market. I mean, we're trading like, 15% below that. So this is a great time to be buying, and it's not a time to be afraid. Because just remember, the price that was previously impossible to hit for Bitcoin is now acting as a support level. Just think about that for a second before you fry your brain about what's going on in price. 70K was impossible for the longest time. It's like, there's no way price can go to 70K. And now that price is 82K, people are so bearish. They're so scared. It's over. It's dead. Like, is it really though? No, because we're still holding this fundamental level. So just zoom out. Don't be so scared about what the price is doing. When, don't forget, it was a pipe dream when we were at 15K that the market would ever go back up. But the people who are smart aren't buying Bitcoin during euphoria. They're always buying it when no one wants it, and they're always buying it at value. And it rewards participants who have conviction in it. It does not reward being fickle. If you're fickle in this market and your mind is going to change every time we're up and every time we're down and every time we're up and every time we're down, you cannot, I'm telling you guys, you cannot win doing that. That's why we're so comfortable holding positions for months at a time, because we don't really care. We know that the end result is always going to be profit, even if that means sometimes sitting underwater. To us, it doesn't matter. And just remember, this is the psychology of how the market works. The shorts get liquidated when there's mass euphoria, right? It gets taken out. And as the price comes down, all the longs get liquidated. This is why I say that long and short players lose in this market 99% of the time. The only real strategy in this game is continuing to purchasing at the right times, and exiting when the short squeeze happens. Because if you follow that rule set, which is how our algorithm works, you'll have success in the market. So, you know, that's the point I'm trying to drive home. Don't sit there watching the price 24/7 all day if it's going to affect your conviction on Bitcoin, because the same news articles that are telling us to be scared and worried will be the same news articles telling you to buy when Bitcoin's back at 120K.
Yeah, that's exactly right.
Yeah. 100%.
Awesome. Thanks, guys. That was good, Sebastian. It's good to have a bit of it's good to be able to see the forest from the trees, I think, and for a lot of people.
Yeah, well, because it's scary, right? Like for all of us. I've been in the game for 10 years. Sometimes I still wake up and get scared at the price, but then I have to like even remind myself, just look back and go, wait a second, you know, just having that mindset. Like, remember, we never thought 70K was even possible. That was such a pipe dream for the longest time. And now $70,000 is acting as support. So what does that tell you, right? Exactly the same as how 20K was impossible. And then 20K acted as the support that bounced us to where we are now. So, you know, you got to look at it like that.
Absolutely. I agree. And the only people that are in trouble here are people that are completely over leveraged. And that's got to do with what Marcus was saying earlier, the position sizing, not position sizing properly. Anyone on the stream got any questions? Post them in the chat now. We've done a pretty nice analysis. It's 42 minutes in. So we're not going to stay on for too much longer. But we'd love to hear you if you have any questions. If you're interested in learning more, book a call. And otherwise, another thing to announce is the software. It's getting very close to being completed, and we're going to be announcing a partnership that we have with a major exchange, which is going to be extremely rewarding for our clients. And there's a lot of exciting new developments coming from that. And also this year, we're going to be attending 5 to 6 live events. We're actually going to be doing maybe 2 events in Europe, at least 1 or 2 events in the USA, and a couple of events in the Middle East as well. So we look forward to seeing anyone there. John asked a question, when's the next video with Geo? To be frank, we were supposed to do today with Geo, and he didn't show up for the call. So we had to switch channels and do it on ours. I pinged him in WhatsApp. He's been quite busy traveling lately, so maybe he got held up. But like I said, we're going to be doing this at this time. It's either going to be on Geo's channel. If it's not on Geo's channel, we'll do our own on our live channel anyway. It's just sometimes coordinating all the time zones is a little bit tricky.
Yep.
Yeah.
Yeah.
Awesome.
And if you guys can't tell, we're always bullish on Bitcoin. We have a short, like, it's good to not be blind, right? I'm not saying that, but it's hard not to be bullish on it when you actually zoom out and look at what it's done historically, right? It's just if you'll notice, we're showing up here every week because we're not liquidated either, because we're managing our positions. So we're never really in danger because we understand how to manage the positions. It's so important.
Yeah, and let's just have a look at this is one thing that I always come back to. The one target that we always have is the power law support. Like we don't mind too much about where we are relative to the actual power law. It's not really part of our system. Obviously, if we're following the power law trend, that's fantastic. But if you actually have a look how far we are from the power law support, it's another 47% drop. That's absolutely huge considering what we dropped. So pretty much anything above that purple line, we're just making money. Like it's that simple. That the only time anyone part of the Minotaur trading system should even be breaking a sweat is if you get close to that purple line. And there are so many things that we can do to protect ourselves at that point. And that's another announcement, is that in 2026, we are going to be really pushing the education aspect of what we're doing. And that's basically educating people on what to do when things, when something unexpected happens, basically. So we'll be working on that as well. John, honestly, the software is probably a couple of weeks away. I did do a demo on one of the live streams. You can maybe track it down, but it's going to happen very, very fast and very, very soon. And we are going to be doing a webinar to announce that and the preview of it. So I'll be sending out invites for that. So if you're in the Telegram group, you'll be seeing that as well. Cool. Anything else to add, guys?
Sounds good. Let's see where we're going to be next week. Be ready to rock.
All right, fellas. Thanks everyone for joining, and I look forward to the next one.